Have you ever wondered how inflation affects our economy? Well, you're not alone. Inflation is a fascinating yet somewhat elusive phenomenon that sits at the heart of economic discussions. It's like that mysterious character in a suspense novel that everyone talks about but no one really understands. So what is it exactly? In simple terms, inflation is the rate at which the general level of prices for goods and services is rising, and subsequently, purchasing power is falling. Think of it as an invisible tax that slowly but surely eats away at your hard-earned money. Now, this can be due to various factors such as increased production costs or excessive demand. The consequences? Well, they can range from reduced purchasing power and increased cost of living to more serious issues like economic instability. Now that we've laid the groundwork, let's delve into the history of inflation, starting from the 1970s. The 1970s were a pivotal period for inflation. This decade saw the world of economics turn to gold, the glittering metal, as a reliable barometer of inflation. You see, back then, the value of gold was directly linked to the health of the economy. As inflation surged, so did the price of gold, providing an early warning signal for economists. But then, a change in the wind. The futures markets began to evolve, permitting the sale of paper gold and silver. No longer were precious metals solely physical commodities to be hoarded and traded. They became financial instruments, their values dictated by contracts and agreements. This shift capped the rise of precious metals prices, breaking their direct link with inflation. So, the 1970s marked a significant shift in how we understand and manage inflation. But what about today? Stick around as we delve into the intricacies of modern inflation management in our next segment. Fast forward to today and you'll find that inflation is a whole different beast. Once upon a time, inflation was measured using a straightforward basket of goods. Your bread, your milk, your apples, all added up to give us a snapshot of price changes. But as we've evolved, so have our methods. Today, we use what's known as hedonistic methods. This isn't about indulgence, mind you, it's about quality adjustments. Imagine you're buying a car. Sure, the price tag matters, but isn't the mileage, the safety features, the comfort equally important? That's what hedonistic methods capture. They account for the quality of goods, not just the price. And this has implications. It means inflation isn't just about rising prices anymore. It's about how our experience of goods and services changes over time. Inflation, like everything else in the world, is constantly evolving. Understanding its past helps us navigate its future. So, what have we learned today? We've dived into the fascinating world of inflation, exploring its causes and consequences. We've journeyed back to the golden 70s, when gold was a reliable inflation indicator. Then we fast-forwarded to today with paper, gold, and silver in futures markets capping the rise of precious metals prices and changes in the consumer price index measurement using hedonistic methods. Inflation is a complex economic phenomenon, but with a bit of knowledge we can all become more informed citizens and consumers. Thanks for joining us on this journey through the world of inflation.